Hello, everybody. Welcome to Zoe's Treasures. My name's Tracy. As always, I'm here with my husband, Noel. He's behind the scenes. He runs our cameras and does all of our cool graphics. And this is our first Friday night 6:30 show. So I'll tell you a little bit about me. I don't know if you're new to Zoe's Treasures or not, but just in case, I'll give you a little bit of background and we'll go from there. So tonight is really just focused on answering your tax questions. If you have any question on tax, accounting, hello. Any questions, new seller support if you want. I'm happy to try to answer anything. As I always say, if there's something that I can't answer, I am sure we have a lot of really smart people in the chat, so somebody should be able to help you out with any questions. So a little bit about me if you are new to Zoe's Treasures. I am a CPA. I've been a CPA for quite a while. I have a whole career history in accounting, and I was a CFO at a nonprofit for a while. I have worked for large global accounting firms. I do currently hold a 9-to-5 job for a large global accounting firm, and I am a reseller. So I have decided to bring my work experience, my CPA, my accounting experience to Whatnot. I do shows like this, particularly around tax time, since there are so many questions around taxes. People don't get into reselling because they love accounting and tax. They get into reselling because they love something else, usually. So I do find that there's a need, and there usually is a lot of questions, particularly this time of year when it's on the forefront of everybody's mind. I do selling shows on Saturdays. I'm mainly in vintage decor and jewelry. I specialize in 925 jewelry, so sterling silver. And I also do shows Monday and Wednesday mornings. We do a chat and sell, so it's very informal, just kind of like a hangout, let's sell a few things show. But my big show, the big one I do on business and tax, is every Friday morning at 7 a.m. I do a 2-hour show. The first hour is focused on a business topic. The second hour is focused on a tax topic. That is called the Live Seller Collection. Right now, we are in the middle of a 52-week series, so a full year series. You can watch these shows as standalone, or they kind of build on each other. And we'll talk a little bit about that as we go through this. But in the meantime, y'all, this is for you. So any questions you may have, I have a few kind of like chat prompts here, some stuff that we can talk about if you're a little quiet. I'll tell you a little bit about the Friday morning shows. I do see some familiar names, so thank you. Hello, Forgotten Memories. Thank you for you guys that do come into the morning shows. I appreciate that. Hello, Southern Charm. So Friday morning shows are really focused on growing your business, taking you from a reseller mindset to a CEO mindset. In those shows, I do also write workbooks. Hello. I also write workbooks. We have quarter one here and just came in this afternoon, quarter two's book. They are not required for the shows on Friday morning, but they do kind of walk you through what I'm talking about and give you a place to organize your thoughts. So for instance, this is week 4. Today is actually week 6. So let's switch over to week 6 and we'll just kind of show you how these things work. Every single month here, we're going to show you from the top view so you can see this better. Every single month starts off with a calendar, tells you what week it is, gives you a place to put your goals. You also have just some plain places to do some brainstorming. And then every week we have a business side. It's going to take you through the 5 key points that I talk about on business, and a tax side takes you through the 5 key points I talk about on tax. And then we have an application or reflection. These are 5 questions I don't ask on the show, but they take you a little bit deeper and help guide your thinking on whatever those topics are, so you can think through it if it fits your business or not. And so it continues on like that. So week 1 is the first 13 weeks, and then week 2 is coming up, quarter 2. So if you're interested, we do have these individually and in bundles. We also have them in PDF format in the bin. And that is the most that I'm going to do a sales pitch tonight. We're just telling you what's there. Also in the bin, hi, thank you for your question, Cavalier Vault. I'm going to answer that in just a second. Also in the bin is a bunch of PDFs, and we also do bundles on those. So feel free to ask any questions on those if you are interested. So first question of the night. Which is better to track income, downloadable finance sheets for income or simple payout amounts? Which is better to track income? I'm not exactly sure what your question is. So to track your income, you should be tracking income, expenses, and inventory. And what you need to use is whatever is going to work for you. And I know that sounds very vague, but hear me out. As a CPA, I don't recommend any specific software, spreadsheet, anything like that. What I recommend is you need to understand yourself and know how you work. If you're a pencil and paper type person, maybe just going and buying a simple ledger book at the office supply store and keeping track of your income and expenses that way is going to work for you. If you're very techie, doing a QuickBooks or a Reseller Genie or something like that, if that's how you operate, then by all means use one of those. What you need to do is find what is going to work for you on a consistent basis. So if I don't like to be on my computer, I don't like to do it on the computer, that's not going to work for me. I would rather use, maybe pencil and paper. Maybe you're an Excel type person. It's more about not what you're using, but the consistency of making sure that you're tracking. Hopefully that answered your question. If that's not what you're asking, just kind of reframe it and we'll get there. So real quick, I do want to say hello to everybody on YouTube. We are noticing more and more people coming on YouTube. If you're on YouTube, come on over here, click the little QR code and come on over here instead to Whatnot. We will also answer YouTube questions, but you can't get into giveaways if you're not on Whatnot. And speaking of giveaways, there is another question I'm going to answer. I'm going to start a giveaway. Throughout tonight, the giveaways are all a motivation card, a vintage postcard, and one of my Zoe's Treasures reward cards. All right. Let's see. I'm going to answer this question, then I'll tell you what the reward cards are in case you're new to me. Can you clear the confusion on if Whatnot only issues a 1099 for 20K sales? And if so, how do we claim our taxes? Do we have to claim if less than 20K? Absolutely. That's a question I can 100% answer. So first off, let's go to the easy part. No matter what your income is, $400, $1,000, $5,000, $50,000, whatever, you have to claim it. There's no free money in this world. You have to claim that money on your tax return, no matter if you get a 1099K or not. Now, the other side of your question is, the 1099K is just a piece of paper. It is just an administrative requirement for companies to report to the IRS. For you as a reseller, you shouldn't really be dependent upon it. You need it, but you shouldn't be dependent upon it. Whatnot and every other platform is required by IRS regulation to send you a 1099K if you made $20,000 in sales and had 200 transactions. You have to meet both requirements. So if you hit that threshold, the IRS tells Whatnot, you have to send this 1099K. You don't have a choice. Or 1099 NEC. You don't have a choice. So Whatnot, though, as a company, eBay, Poshmark, any of these places, as a company can decide, you know what? I'm going to lower that threshold. I'm going to send them if they're 15,000 or if it's 10,000. They can go as low as they want and send those forms out. It doesn't make sense for them to do so because it costs them money. It costs them the labor, the time, the administrative work to send them out. So more than likely, what most companies do is just comply with exactly what the IRS says and sends that out. What you should do when you get that 1099 is review it and match it up to your records. Think about this. The 1099 is Whatnot's story of what happened in your business. That's their side of it. Do you want to pay taxes on Whatnot's story, or do you want to pay taxes on your story? So you should be keeping proper accounting records, bookkeeping throughout the year. Before you ever even get that 1099, you should know exactly how much money you made and be able to match it up to that 1099, because your tax return is the equivalent of your story. So you want to make sure that you're keeping your records to match up. Hopefully that answered your question. Feel free to put in if there's any other questions about that. How do I handle cash back from making purchases on a credit card? Okay, so I am assuming, Melinda, is that the credit card is fully a business card and that you've made business purchases on this card and now you're getting a reward back, okay? So that's just revenue. That is just money back. You record it as revenue on your books. So it is taxable income to you. It is just another source of revenue. It's like a refund or a rebate of some sort. So it's not sales money, refund or a rebate, and you include it on your tax return. Tripod says, I received a 1099 from Whatnot and I only have 6,900 in sales. Yep, they are allowed to do it at any point below that 20,000. So it's up to their discretion at any point up to 20,000. When it hits 20,000, they don't have a choice. At that point, they're required to. It doesn't make sense for them to send them out when it's less, but they do sometimes. Hello, CG Boomerang Echo. How are you? So are there any other 1099 type questions? I mean, I will answer any question. I really don't have an agenda for tonight. I'm just talking, seeing if you guys have tax questions. Because I'm normally on early mornings, I feel that I missed I don't really know I love discounts. I have a few kind of talking points just in case it gets quiet. I have a few things I can talk about, but no real notes. Didn't.
Hello, Miss Echo. And yeah, that's shocking. I love discounts. No notes.
No, it's really about answering people's questions. I felt that I was missing the West Coast. We have a lot of West Coast sellers, and with me being on usually at 7 in the morning, that's quite early for all of you on the other coast. All right, we have another question from Hank's mom. So regardless, summary, you have to report all income and offset it with losses, 100%. Yep, you got it. So you would take all of your income, minus out your cost of goods sold. So all the income from all sources, every place you sell. And we owe 24018. It took me a minute there. Congratulations on that giveaway. Thank you for being here. So you take that minus your cost of goods. That gives you your gross profit. And then you can minus out all of your administrative expenses, your shipping cost, etc. And you get to your net profit. And your net profit is what you pay taxes on. Hello, Custom Wood Burning. I am finally doing a show on your time, on West Coast time. So,
hello, Custom Wood Burning. And Hotel Lobby, yes, it will be on YouTube as well. It's already being multicast.
So, can I restate that? Sure. So the way your taxes work, if you are a sole proprietor, most people on Whatnot are sole proprietors. That's how you start in business. Before you incorporate, it's just you. You're like, hey, I'm in business. You're automatically classified as a sole proprietor. As a sole proprietor, you file what is called a Schedule C. That is just a piece of paper. It says Schedule C at the top. It's an IRS tax form. That gets attached to your 1040, your personal tax return. On that Schedule C, the way that the flow goes, the way that it works, is you report all of your income. So you take all the various income sources for that business. So if you have different businesses, you do different Schedule Cs. But let's just say all you're doing is reselling. You take your eBay, your Poshmark, your Mercari, your Whatnot, whatever you do, you add all that income together and you report that income. Then you report your cost of goods sold. That's the cost of the inventory that you sold. You get to a gross profit at that point. After that, you take off all the other expenses, shipping, fees, home office, mileage, subscriptions, telephone, internet. You take all that stuff off and you get to a net profit. The net profit is what you're taxed on, what your self-employment tax is based on, and what your federal withholding tax would be based on. Yep, Patty has it right there. Report income minus expenses, and that's what you pay taxes on. That's it in a very concise manner. So we will get into one of these nights, maybe next week, I'll actually pull up a Schedule C. Tonight was just about asking, no, it's okay. Tonight was just about asking questions. But if there's any interest, I can actually start walking through that. However, let me kind of talk about something I talked about this morning, just touch on it a bit. I don't want to say a misconception, but a lot of times when we think about accounting as resellers, I already said at the beginning, we don't start this bit, we don't go into reselling because we're like, oh yes, I want to, keep track of my expenses. None of us like that, right? What is the percentage on net income? That varies. That varies on your personal situation. So the percentage that you pay on net income varies widely. It depends. Do you have other income? Do you have W-2 income? What else is happening on that tax return? So it could be anywhere. You could be one of the lowest tax brackets or you can be one of the highest tax brackets. Just depends on all the other facts and circumstances on your tax return. Because remember, your Schedule C isn't standalone. Your Schedule C ultimately gets mixed in with everything else happening on your 1040. And state too, yep. Then you also pay your state taxes if you live in one of the states that charges state tax. So one of the things I was talking about this morning is we don't do this because we love accounting, right? And when resellers start thinking about accounting, unfortunately, many resellers only think about accounting come January, February, March, when the tax man starts knocking, right? We're like, oh, shoot, April 15th is sneaking up on me. I need to file my taxes. And that's when the realization that we need to do some accounting really starts to sink in and become real. Unfortunately, that's a really bad way to operate a business. It is our responsibility as the CEOs of our business to understand and know where our numbers are throughout the whole year. So accounting is kind of like a byproduct. It's a secondary thing, or not accounting, sorry, taxes. You should be keeping your records, recording all income, recording all expenses, and tracking all of your inventory from day one. And every month you should know where you stand. You should know every quarter, do I owe estimated taxes? Where am I? What does my tax projection look like? What are my financial statements? What's my profit and loss? What's my balance sheet? How do I use this information to make decisions? So it's a living, breathing part of your organization, of your business, your financial records that you should be using as the CEO of your business to understand where you've been and determine where you're going. Who's getting this giveaway? I love discounts. That's rigged, but that's going to you. Thanks for being here. And then come the end of the year, there should be no surprises. Exactly, Southern Charm, right? There should be not one of us who is sitting here in the beginning of February dreading April 15th, because you should already know. And that's kind of my goal on Whatnot, is to bring this information and bring that awareness, that it kills my soul to see people who are stressing in February because they're not sure how much money they're going to owe in April. That you should have already, that should have been done and settled. There should be zero surprises. So kind of my goal here is to help ease that, educate, help create the awareness so that as you move through your reselling journey, you're confident in your numbers and you have clarity and vision. And it's not something that's stressing you out, because it really shouldn't stress you out. It shouldn't be something that's hard in the business. You wish you had learned this all last year. What's the penalty for not paying estimated taxes? So that depends. I don't know the percentage right off the top of my head, but it also depends on the amount that you owe. So you don't get a penalty for necessarily not paying the estimated tax. You will get a penalty if you did not pay tax in a timely manner throughout the year to the IRS. So let's think this through. Shrinking back in your seat. You didn't fail miserably. If you realize where you've been and now you can change it and just change how you move forward. That's all there is to it. So when it comes to estimated taxes, and I do have a PDF in the bin, and I'm not here just to try to sell you guys stuff, but there is one that really goes through all of the various scenarios and really explains estimated taxes in very common to use language. However, I'll do my best to explain it right now for you. The IRS says that what they say is you look at last year's tax return. There is a line, and if I remember correctly, I want to say it's line 23. Don't quote me on that. Somewhere in that ballpark. On your tax return, your 1040, that says your tax liability. Your tax liability is the amount of tax you owed for 2025 or for whatever year. So let's just say last year. Then after it has that tax liability line on your 1040, it has a space for all the taxes you paid in. So if you have a 9-to-5 job, you're getting a paycheck, your employer's withholding taxes, they send you a W-2, you're going to, that W-2, that's where that's reported. So you're paying these taxes in. So you have your tax liability minus what you paid in, ultimately ends up being you get a refund or you owe a little bit of money, right? So that tax liability line is a very, very vital line when it comes to your estimated taxes. The IRS says if this year in 2026, you expect that tax liability line to be $1,000 or more greater. So if, say last year it was 1,000, and if you as a reseller expect that tax liability line to be 2,000, that's 1,000 more, right? Then it's up to you to make sure that you're paying that liability in timely throughout the year. So how do we even get to that number to begin with? We go back to our Schedule C by understanding what our revenue is, what our expenses are. We get down to that net number, and we can start to determine, I'm making a profit here. I'm going to have some liability that I'm going to need to pay. Now, it's not directly your profit that gets moved over to that line. But let's say last year, when I look at my tax return, I'm in a 25% tax bracket, okay? It's a nice, easy number to work with. So I can use that knowledge I have from last year and say, okay, I know I was in a 25% tax bracket. My projected liability this year, I think my net profit's going to be $10,000 this year. So that means I know I'm going to be paying around $2,500 on my taxes for my business, on my federal withholding, right? Well, if that's more than 1,000, I may need to pay some estimated taxes. So this is why I go back to my prior statement that it's so important to know where you are throughout the year, because there's ways to mitigate this. We can spend a little more money, we can make a little less, we can, think about other types of deductions. Maybe we can put some money in different ways. So there's things that you can do, not loopholes. We'll talk about loopholes. Things that you can do to mitigate that. But it's really kind of late. If your eyes get opened in February, you're like, oh, it's too late, because all of those things that you could have done need to be done during the year, during the tax year. All right. Oh. Forgotten memories. Congratulations. We've got another question. Before I answer your question, the Dazzle Pot, I see that. I mentioned rewards cards earlier. Real quick, if you are new to Zoe's Treasures, I just want to mention what these are, because these are going to be part of your giveaway. So I do not do rewards through Whatnot. I've developed my own reward system that I spread out throughout my shows. So every time you order from me or get a giveaway, you get one of my rewards cards. They are numbered 1 through 9. Every card is worth $2 off any show. Any show I ever do, you can use this code for $2 off. There's a code on the back there, tells you what to do. On my selling shows, I will put 2 numbers out there, and if you have those 2 cards, you get $5 off in that show. So they are good throughout the whole year, and you you have replacements? No replacements. You got to keep them when you get them. And they build upon each other. So these are rewards cards that are basically free money that we give out as part of our giveaways.
I love discounts. I hear that Tony likes to barter. Are you willing to barter?
All right. The Dazzle Depot. I need to file an amended return for 2024. Does that need to be submitted before I submit my 2025 tax return? Only if there's something that carries over from your 2024 into 2025. So that depends on your personal situation. But if you have something like carryover losses, some like passive income, probably nothing from your Schedule C. If you're just doing a Schedule C and you're a W-2 employee, you're probably not going to have that. If you have other types of investments and you have passive losses, you may have some losses that can carry over. Then I would say absolutely file your 2024 before your 2025. If on a regular basis, your returns are fairly simple and you don't have those type of carryover situations, then no, you can do your 2025 and then just play catch up on your 2024 later on. What else am I missing? Can I write off my house, car, etc. if I sell from home and use my car for business? Yes, Cammie, there are ways to do that. So, and this is a really common question, so I'm really happy you asked that. Let's start with the vehicle. Let's start with the cars. So for the cars, the IRS for last year allows 70 cents per mile. And that adds up really, really, really quick. So one of the things hopefully you all have done is kept a mileage log throughout the year. So either an electronic one, an app, a written log. You should have been logging every time you go to the post office to drop those packages off. You go sourcing. whatever you do for the business, go to pick up supplies, you should have been tracking your mileage. All of that is deductible on your tax return. And so that's just a plain mileage rate. That's 70 cents, and it changes every year. Hank's mom, I'll get right to your question. That 70 cents is every single year it's a different amount. And I haven't even looked up for 2026. I'm still stuck in last year's tax mode. And that covers your gas, the wear and tear on your car, the car insurance. So kind of any expenses you had with your car is reimbursed through that 70 cents. The only caveat to that is if you're in an incorporated business and your vehicle is titled in the business name, then you can deduct actual expenses for that vehicle. That's usually a little rare with Whatnot. I don't want to say rare, but that's not the most common thing that we're seeing. The 70 cents, the mileage is the most common that people use. For the home office deduction, again, there's a couple of different ways to do that one. So there's 2 ways the IRS offers. There's a simplified method, but before you even go there, you need to understand you're only allowed to write off the portion of your home that's used solely and exclusively. Those are 2 words quoted right from IRS regulations. Solely and exclusively for your home business, okay? So that means if you're selling off your dining room table and then clearing the stuff off and eating there for dinner every night, you can't really write off that space. But if you have a bedroom or you have even a guest room where you have a bed on one side but you have your shelving on the other, you could take the square footage of the space that you are using exclusively for business as a home business deduction. If you have a garage that you use, a portion of the garage. So you really need to kind of think it through. And then they offer what is called a simplified method, which is basically they give you 300 square feet, no questions asked, here you go, you can have 300 square feet to write off. Or they have an actual expenses where you start taking into consideration the percent of utilities. So let's say if 5% of your home, if that square footage that you calculated equals 5% of your home, you can start looking at 5% of the rent or the mortgage interest, 5% of the utilities that affect that, like lights or heat, and start taking actual expenses. So there's 2 different ways that you can take the home office, and you've got to pick one or the other. Can you use credit card statements as proof of spending? What percentage can be written off for home, electric, car, square foot? Okay, so I think I answered the second half. The second half has to be tied either to the simplified method and you just take what IRS gives you, or it has to relate to exactly the percentage of the square footage that you're using. So it's a ratio compared to the square footage of the overall home. You can use credit card statements as proof of spending. There is a caveat with that, though. There's something you need to watch for. One, that credit card should be solely used for business. You should never be mixing your business and your personal finances when it comes to banking or credit cards. So that credit card should be solely for business, just as a best practice, okay? And the credit card statement would hold up in an audit, but you gotta put an auditor hat on. You gotta step back and say, okay, if I wasn't part of this business and I came in and I looked at this credit card statement, what kind of questions would I ask? So if I see, office supply store, common like the Boxery or Uline, these common places that a reseller would order from, I would probably just kind of start scanning and being like, oh yeah, that's normal kind of places resellers buy things from. But then all of a sudden, if a grocery store name popped up or some other type of names that are really unusual and doesn't make sense for a reseller business, if I didn't know, I would be like, what is this? So while you can use it, anything that may raise a flag or an eyebrow about, you should note on your credit card statement a little bit of specifics. Because the IRS you're not going to file this and they're not going to get you a letter next month auditing you. If you ever get audited or questioned, it's probably a year, 2, 3 years down the road, and you won't remember what that expense is for. So you can use it, but you may want to take some time to actually put some notes on it. Let's see. I have bought a lot on Whatnot to turn around and resell. That's great. Can I add the total up I bought and subtract my sales plus my extra expenses? Okay, so when you buy on Whatnot to resell, It is no different than if you were to go to an auction or Goodwill or a garage sale. Whatever you buy, the cost of that item, the tax on that item, and the shipping to get that item becomes your cost of goods, becomes your inventory cost. Okay. When you sell that inventory, then you can take that expense. So I think by reading your question, yes, you can. I think the answer ultimately is yes. But I want to make sure that we're talking the same language. So you buy something on Whatnot, you pay $10, there's $1 in tax, plus you pay $5 for shipping. That $16 becomes the cost of that item. That's what you can ultimately expense when it sells. Gotcha, great. So one of the questions that come up, and please, you guys, put your questions in if you have them. I'll just talk about any tax topics that come to mind while I wait to see questions. Let me run another giveaway while we're going here. One of the other questions that comes up is inventory. We'll get to that. Okay, Happy Fox. As a sole proprietor, can I get a resale certificate to be? Absolutely. Yep, you can, 100%. And now your resale certificates are handled through the state. So you would go through the state, submit whatever information. It's usually an online process in most states, and you'll get your sales tax exempt certificate. So definitely, it'll save you on paying taxes. So absolutely. So you mentioned sales tax certificate, and this is another question I see on a regular basis. Whatnot handles our sales tax. So when I'm talking taxes to everybody, I'm focused on federal taxes. Sales tax, we don't, as resellers for Whatnot, for eBay and all the other platforms, we don't need to worry about them. Thankfully, part of our fees that we pay to these platforms also covers the service of them collecting and remitting those taxes on our behalf. So it saves us some of the administrative burden. If I inherited the merchandise I am selling, what can I use as my cost of goods? Very good question. So when you inherited that merchandise, you should have got the basis at the time of the inheritance. So the basis is the cost of the merchandise at the time of the inheritance. So let's just say grandma bought a piece of art back when she was starting out new in her marriage, cost her $50. Grandma, goes through the marriage, has all the babies, lives her full life, unfortunately passes away and leaves that piece of art to you. Well, probably a good, hopefully 60, 70 years have passed at this point, and that art has increased in value. Whatever the value is when you get it, you get that step up in basis. And so whatever the value is at the time of inheritance should be your cost in that item. Now, if somebody just gave you something, freely gave it to you, like your sister comes over and is like, you know what, I bought this vase, I don't like it, you can have it and sell it. That's different. That's zero cost. I don't have anything in it, which is great because that means anything I sell it for is profit, right? Good Stuff says, I keep all receipts and I label them. Can I use the same credit card for my other business? I'd hate to have 10 cards for each business. Thoughts? Okay, so without knowing what the other business is, when you say other business, to me, absolutely not. No, I would say no. That gets messy. This is why that gets messy. Your Schedule C should be for the same type of business. Like I would file a Schedule C for all of my reselling business. That is one business. An esthetician is so different than a reseller that's a separate Schedule C. And those expenses should be recorded, revenue and expenses should be recorded and maintained separately and reported separately. And if not, think about it from the IRS's perspective. If you didn't do it that way and they allowed you to mix it all up, you wouldn't have any true where do you really owe the money. I know at the end of the day, it all nets out, but to the IRS, it's important on which one owes the money. Let's see, I'm going to go back to this question. If I am selling items I own, do I just estimate what I paid for the cost of goods? Yes. Looking Glass Treasures, hopefully you should be able to kind of remember. If it's something you bought 10 years ago and it's like a piece of something that's been hanging on your wall and you're like, yeah, I'm redecorating, I'm going to sell this. do your best to estimate what you bought it for. I mean, there's going to be some things. There's cases like this all the time. I have it happen to me where it's like you're cleaning out a closet and you find something. You're like, oh, I never use this. I might as well sell it. You just do the best you can to be fair in price. If I am selling new with tags clothes from the personal clothes and I have email receipts, so my cost of goods is the original price on the receipt, 100%. Yep, Cavalier, that is exactly correct. I love discounts. What if you're a esthetician selling beauty products and skin creams? That's still, now you're going to muddy the waters. You're going to make it confusing. You have to ask as an esthetician, if you're selling those things, are you selling them on Whatnot? That's your Whatnot business. Your esthetician, are you operating as an esthetician and doing facials and whatever else? That's separate income. So, or are you selling your products and skin cream and your esthetician business and not on Whatnot? You have to have some divide somewhere. Let's see who's going to get that next giveaway. Looking Glass Treasures, thank you for being here. Taxes are muddy waters. They absolutely are. And you make such a good point because, you know, the IRS, we think it's so black and white. They have thousands upon thousands of pages of regulation. Thank you so much. I'm glad I made sense. So the IRS has so many pages of regulation. So you think it's like this clear-cut rule. It is not. There are so many gray areas. And this is where you're going to hear me as a CPA give you advice. My perspective is from a tax perspective, from not in a bragging way, but I have a master's degree in taxation. So I have an education in tax. I worked as a tax accountant and I've been in the accounting field for over 30 years. That's where I'm coming from. I also take a very conservative view. I'm not risky. I don't give advice where I'm pushing that envelope. Jewel, I see your question. I'll come right back to that. I don't give advice where I'm pushing the envelope. I play it safe for taxes. That's where I come from. Not every CPA. There's other CPAs that are like, nah, I'm a little more risky. I can push the envelope with my clients a bit more. And this is why you may get different answers from different CPAs. Let me get back to that question really quick. When I buy lots, do I have to itemize each item? No, you do not. You need to account for the lot, but you don't have to itemize each item. As long as you're consistent in the way that you're tracking your inventory, it does not have to be on an item by item basis. You may want to look at the lot though, and if it doesn't completely sell within the year, to know that, hey, everything on this shelf or everything in this tub cost me $200. And then at the end of the year, when you're looking at your inventory, you're like, I sold half of it. Okay, so I have about $100 left. So you should have a way to kind of track the lot, but you don't have to do it on an item by item basis. That would become impossible for some sellers. Anyone that have bail money for me? I didn't. You're not good. Don't worry about that. You do the best you can. And I'm going to talk about recreating, because I actually had, let me just make myself a note to make sure I talk about it. I actually had a good question message to me earlier that kind of goes in with what Hank's mom's saying. But let me mention something really quick. Hank's mom, and anybody else who may not have been in my show earlier when I was talking about it, this logo behind me, Ledger to Leadership, this is a 12-week bookkeeping class that I'm offering for resellers. It is a free class. It is starting on March 2nd. It'll be every Monday evening at 6:30 p.m. for 12 weeks. This class is going to take you from the very beginning, what is the accounting equation, all the way through being able to create a set of financial statements for yourself and understand those numbers and use them in your business. So feel free to bookmark those, come and join it. They will also be on YouTube if that timing doesn't work for you. But I highly recommend it. It is a class that I am writing myself based on my experience, and also writing educational materials is something I do in my day job. So I bring a little bit to that. And so right there, Ledger to Leadership, and it will take you all the way through. So next year, you're going to be sitting there nice and happy, and you're going to be like, I got this, right? Let's see. I always write out, y'all, excuse me, my husband keeps telling me my hair hits the microphone and makes noises. I always write out what my thought process was in making a business decision, because if you are audited 100%, that is such good advice, B squared, such good advice. Anything you're doing, when we're talking about the square footage of our house, or we're talking, like, this is a perfect one. How much of your cell phone can you write off? Okay. If you have one cell phone, you have a personal cell phone. I have an iPhone. I use my iPhone to talk to my kids, to talk to my family. I use it personal. I use it for my other job. I use it for whatnot. Me as a seller, in order to deduct some of that cell phone expense, I need to say, okay, how much of the use of this phone is really whatnot use? So I may say 25% of that phone is really used for whatnot on a regular basis. Well, if I'm ever audited, they're going to ask me, well, how did you come up with 25%? I can't look an auditor in the eye and say, oh, sounds good. Sounds like a good number. No, like B squared says, you need to be able to like have some justification. So you write it down, put it in your file it away with your tax return. And you say, you know what? I look at my phone records. It says that I make 300 calls a month, or I'm online for however. I know I run shows this often. Hank's mom got that giveaway. Thank you. I know I run shows this often. Here's my justification of 25%. That is a practice that you should be doing on anything that could be questionable or judgmental. When you're having to use judgment in making like what percentage, you should be documenting that judgment. Jules, okay, hold on. Let me go back in, because you said, does it apply even if I do accrual? What was the original question? Because I've talked so much. Yes, absolutely. That is accrual accounting right there, what I was explaining, Jules. Is there a tax credit deduction for inventory? It's not really a tax credit deduction. The inventory that you sell is a legitimate expense for your business. It's a deductible expense. Let me just make sure I'm answering questions, and we'll talk a little bit about inventory, because there's a couple of ways that you do inventory on a tax return, and they do cause a little confusion. Okay, Happy Fox, I'm a little confused on which documents would be best to purchase from the bin to get started. Also, do you ever offer free shipping? I do offer free shipping. So from the bin, what are you, to get started, what are you, like, what's your concern, or what's your, what's something on your mind that you're like, I just don't quite understand this. If I know kind of where you're coming from, I can kind of guide you to what might help you the most. And I do free shipping. I did free shipping actually for 6 months in the vintage decor category. I am a huge proponent of free shipping, highly recommend it for certain people. And I do free shipping currently in jewelry. Whatnot also shows the amount of hours you spend on the app. Can I use that in reference? Yes, absolutely. So that would be your justification. You can use that in helping you decide what that percent is. So,
What you making?
Let's see, what did I miss? My husband says I missed a question. Here it goes. What you making? Hello, friend. Any suggestion for setting up an effective way to set up an Excel sheet for all of your purchases? Yeah, absolutely. So I have an Excel sheet in the bin that's just very basic, but you really only need to track a few things, right? If you know Excel, put some titles across the top of those columns. You need to know the date you purchased something, where you purchased it from. That's a good reference, right? You need to know what receipt if you ever need to go look for it. A very short description of what it was, how much you spent, and then a category. Was it shipping supplies? Was it something else? Was it a subscription to Vendu? So 5 columns. That's all you need, is a 5-column Excel to keep accurate expense records. Oh, great. Thank you for bookmarking the March show. And we go to Alex when we see our screen time. Yeah, they might. For me especially, they might. Let's see. What else am I missing? Okay. Looks like we're going, how should I document inventory that didn't sell and now is past your expiration date? Okay, so that tells me you're selling some type of consumables because there's an expiration date. So let's start with basic inventory accounting here. You buy inventory. So you take cash that you have, right? Cash, credit card, you're taking money, and you're exchanging the money for a product. At that point, your inventory is just an asset. It's just like your cash. It's an asset. It's not an expense at that point. Okay. Then you do a show, you sell some of that inventory. The inventory you sell, that inventory now becomes your cost of goods sold, right? Before it's just goods, now it's the cost of goods sold. So at this point, you should have some inventory still sitting up there as an asset, and you should have some cost of goods, the inventory that you sold. So you're saying, hey, I have some inventory that's sitting up here as an asset. I can't sell it anymore. I need to do something with it. So you just pull it down as an expense and you throw it away, or you donate it. You do something with it. You get rid of it. But the inventory, if you have to dispose of inventory, expired, obsolete, damaged inventory, you did pay something for that. So you pull it out of an asset and you look at it as if you sold it. You record that cost in your books under cost of goods sold. There's actually a line on the tax return that I think it says like obsolete inventory that you can record it under, but that's not necessarily, you can just put it with your cost of goods. What would be best from your bin to bring to your March class? Also, is this being recorded? Yes. So Hank's mom, all of what I do is on YouTube. So you can always go to YouTube. My husband has spent a lot of time categorizing things, so it's easy to find on YouTube. You should be able to look up like all of the tax and accounting type topics.
If you go to our YouTube page and you hit the playlists, you will be able to see by categorizing the different shows. So
Yep.
the live seller, it is the one that has all these tax talks and business talks.
So for the March class, I do not have those in the bin yet. I have ordered, I've created a book for the March class. The book will not be necessary. You can attend the March class with just a pen and a piece of paper.
The Vintage Gypsy Brie, thank you for asking. No. If you're going to purchase anything from the bin, any electronic assets, please, please, please send us a DM with your email address so we can send it to you right away.
And I will expand on that in a second. So for the March class, you don't need to buy anything. You can just come with a pencil and paper. Now, starting next Friday, hopefully by Friday, just as long as the shipping gets here on time, I do have workbooks that I have created that follow each lesson. They actually have like problems like to work through, to guide you through to understand how to like debits and credits and the whole accounting. That will be for sale starting next Friday. But again, it's not, you don't have to buy it to take the class. The class is free. You can attend without spending any money. If you want the tools, they'll be, hopefully by next Friday morning show will be the first time I'm able to offer them. So that's what I'm hoping. Fingers crossed that the shipping comes through. And the reason I do not use Google Docs is, one, I just don't like Google Docs. That's probably the main reason. But two, there's not a reason for me to update these on a regular basis. The information in my PDFs is based on kind of tried and true IRS and business knowledge. If I ever were to have to update it, I would make we know who we sent them to, we can resend it, but they're not ones that are going to change very, very frequently. I try to make the information I put in them to be evergreen examples that will last for a long time. Q2 book, yes. So somebody asked about our Q2 book. I talked about them this morning, and I was waiting on them this morning in my show. They are in now. So we have Q1 is the private ledger. This is the 13 weeks we are currently going through. And Q2 is next quarter. Q2 just came out, so you will see in the bin. I'm offering a kind of different scenarios here. So Q1 is not available as a standalone book anymore, but the PDF is in there. We have marked the PDF down in cost because we're halfway through the quarter, and I realize that. So the PDF for Q1, you can buy that. I am offering a bundle of these two books together. You will see a bundle, so you'll get a discounted price if you buy Q1 and Q2, or you can buy Q2 by itself. That's in the bin, and there's also a PDF of Q2. Anytime you buy the book, you get the book, and the PDF automatically comes with a book. So you can view it on the go or in physical format. And I try to do the PDFs and the books just to accommodate various budgets and personal preference. Some people don't like books. Some people prefer books. So,
also, if you buy the PDF, it's the same file that we used to
Exact
print
same
this
file.
one. So if you want to print it on your own, you're more than welcome.
Yeah, the PDF is page for page the exact same. The only difference is we didn't print it, so that's why we can offer a PDF so much cheaper. It is color, so know that if you're buying the PDF and you're planning on printing it, I think I even put it in the description, probably best to like send it to a Staples or something. I think for printing, it's going to run you around $15, was my estimate at Staples or Office Depot or wherever. All right, let's talk about inventory a little bit until I see any other questions in there. So there's two different methods in accounting. There's cash and there's accrual. And it can get a little confusing, and I'm not going to go into all the ins and outs of it, but we're going to talk kind of high level. At the very beginning of this chat show, I said, we do our bookkeeping. There's two separate things. You've got your bookkeeping. That's for your own records to make decisions, to use in projections. And then you have your taxes, okay? Your bookkeeping forms the base of what you start to do your taxes with. In bookkeeping, to apply bookkeeping, the proper way to keep your books is on accrual. That's what's called GAAP, generally accepted accounting principles. So your books should be kept in accrual. Most people don't, and it's not a big deal if you don't. If you're creating a set of financial statements for a bank, for a loan, those need to be in compliance with GAAP. But for your own purposes, you just keep your books, okay? When it comes over to taxes, for inventory purposes, you have the option of doing cash or accrual accounting for inventory. The difference in how those work is, say in 2025, I bought $10,000 of inventory in 2025. Come times to do my taxes, if I'm using the cash method for tax purposes on my inventory, I can expense all $10,000 of that. All $10,000 I can take as an expense in 2025. That means no matter what is still sitting on my shelf to sell, I'm going to expense 100% of what I spent on inventory. That's cash. The problem comes with that is that next year in 2026, now you're selling inventory that you already took the expense for in the prior year. That inventory then becomes 100% profit. So the cash method may make sense in certain circumstances, but in other circumstances, you really need to be able to understand and project and kind of have an idea on where you're going to be in taxes to make sure that you're not shooting yourself in the foot and causing a larger tax bill in the subsequent year with the cash method. There are reasons to do it and reasons not to. It's not a one-size-fits-all. Now, that's the cash. The accrual version that you can elect to do for your inventory on your tax return is just like accrual accounting. That's what I was explaining earlier, where I don't expense my inventory until I actually sell it. So if I bought $10,000 in 2025 and I sold $5,000 worth of that, only $5,000 goes as an expense on my tax return. The other $5,000 is sitting there waiting for me to sell it in 2026. That's the proper way, because that matches your expense with the money you're spending to make the revenue. It's proper matching principle. You will see people on Facebook, you will hear other sellers, you will hear people say, you don't need to track inventory, it's not necessary, it's just an expense on your tax return. What they're referring to is the cash method. This is where I say, and particularly in your first year or in a year of tremendous growth, you really should consult with a CPA or an accountant of some sort to make sure, because doing your taxes isn't just a one-year thing. Your taxes, you need to understand what's happening because it can affect you in the next year. So my scenario of not selling anymore means I can't count all my inventory, even what I didn't sell. So your scenario of not selling anymore, no. So in that situation, if you stop selling completely, that is a perfect reason to use the cash method, because you want to clear out all that expense. If in 2025 you dabbled, you were a seller for 5 or 6 months, you made some money, you bought some inventory, and then you're like, this just isn't for me, and you still have some inventory sitting on your shelf, come tax time, using the cash method absolutely makes sense because you don't ever plan on selling that inventory. So you take all the expense, you're never going to do another Schedule C, you're done, business is over. So that, and this is where I say it's not a one size fits all. You really have to understand your situation and where you're going with it to know which one to do. This is one of my things that really irk me because I hear so many sellers who aren't tax people. They just know their CPA wrote it all off and they're like, oh, you don't need to do that. But they're coming from a perspective that worked for them. And what works for me may not work for you in your tax situation. So I can donate, and yes, absolutely. Absolutely. So the other thing I was going to talk about until I see more questions come in, let me run another giveaway really quick. The other thing I was going to talk about is if you're just popping in and you're like, oh man, I didn't keep anything. I didn't keep my records. I really didn't track things very well. I didn't know I needed to. First off, don't stress. You know what? It's cool. You are not the only one. You're not alone. There are a lot of people that start this and don't realize all the stuff that reselling entails. And now they're sitting here at tax time going, uh-oh, it's cool. We can fix it. It's cool. There's steps you can take, and I'm going to outline those steps for you. Melinda says, if you do cash method last year, can you do accrual this time? Yes, you can. You can switch. Now, there's some steps that you have to take, but you can switch, and I would definitely say use a CPA if you're going to switch, because there's other things that they need to look at to make sure that it's reported properly. 2 months of stressing. Don't stress. This is what we're going to do, okay? If you didn't keep records or you kept spotty records, just take a deep breath. You're like, okay, I learned something. I'm going to move forward and do it right, okay? So for 2025, you're going to look at a few things. You're going to, hopefully you got a 1099. If not, that's okay. You're going to go to Whatnot. Full transparency, it's me. You're going to go to Whatnot and you're going to get the annual report for last year. Under your seller hub, finances, click on that tab. There's a option that says statements and reports. Click there. There's a little drop down that says annual. That'll bring up any years that you sold on Whatnot. You're going to download that 2025 report. That report is going to give you all the money you earned on Whatnot, all the fees you paid on Whatnot, and if you paid any shipping out of pocket on Whatnot, or if your computer crashed like mine. Oh yeah, that's bad. Oh, that hurts even worse because you did it and now you got to redo it. So you're going to go and get that, and it's going to tell you that information. That's your start, okay? Now you know your revenue from Whatnot. If you sold on other platforms, you're going to do the same thing on those platforms, okay? How do you go about finding a good CPA? Don, I will get to your question. Let me just finish this thought, and I'll come right back to you. So you're going to get that. You know your revenue from this platform and any other platform. That's your beginning, okay? Then you're going to go and say, okay, what credit cards or what banks did I use to buy stuff with? And you're going to take the time to download all of those statements and sit there and go through every single statement and identify any business purchase that you can. Are you going to miss some? Probably. But that's the lesson we learned, right? Get as much as you can. Figure out on those credit card statements what you bought, if it was business or not, and recreate, okay? Best you can do. Then you're going to do that the same thing for inventory. So as you're going through those your bank statements, credit card statements, if any of those purchases were inventory, you're going to make a little side note that those were the inventory purchases, and you're going to look at 4 things for inventory. What did you start with? Okay. If you just started selling last year, your beginning inventory is 0. If you didn't start selling last year, look at your last year's tax return. There'll be an inventory number on there. Hi, Trish. So for your inventory, you get your beginning number. And then you're going to look at, what did I buy? That's what I just said. You're going through all your credit cards. You're going to say, okay, now I know what I bought. What you won't know is what you sold. That's what you're going to have to back into. And then it's your ending inventory. So it's just a simple math formula. Beginning inventory plus what you bought minus what you sold equals your ending inventory. So you just back into what you sold. So now at this point, you've recreated your revenue. You've recreated your expenses to the best of your ability. and you've recreated your inventory. The final thing you're going to do, if you didn't keep records, is to take all those expenses and start looking at it and say, okay, if I went and bought stuff at the office supply store, I must have drove there. Well, that's some mileage, and you're going to start to recreate a mileage log to the best of your ability. And that's what you're going to use. Is it perfect? No. Is it better than nothing? 100%. How would you go about finding a good CPA in your area? Is there something you should ask to know if they are good? Great question. So I would start looking for a CPA from like a regional firm. So CPA firms you've got kind of different sizes. So you've got, and it doesn't have to be regional. You've got people who are just the sole CPA. They own their own firm. They maybe have them and a bookkeeper working for them. They're going to be the least expensive. And they're probably just as good as all the rest of them, okay? Then you have more regional firms. These are a little bit bigger, maybe a group of 4, 5, 6 CPAs, sometimes bigger. Sometimes they have an audit department and a tax department, a financial advisory department, a little bit bigger. And then you start getting into kind of multi-state national firms. Don't go for the multi-state national, the KPMGs, EYs, those big names that you hear. They're going to be too expensive. They don't dabble in small-time people. They want to do a lot of our whatnot type stuff. That's not their clientele. So look for that single CPA, working on his own, or a very small regional firm. Most of them will give you free consultations. Now, if you call them right now in the middle of tax season, you may be a little screwed. They may be like, we are like working 80 hours a week. We'll file an extension for you and we'll meet with you in April. Just take it. If that's what you need to do, that's okay. Because honestly, we should have done that step back in November. So we got to deal with it the way it is. Meet with them and ask them, hey, what's your experience with resellers? What type of clients do you serve? How do you stay up on your education? As CPAs, we are required to do 80 hours of continuing education every 2 years. It varies by a few hours state to state, but basically it's around 80 hours. And your CPA does not have to specialize in reselling. CPAs are trained in a broad range of industries. Just because they don't know reselling does not mean that they would not be a good CPA. There are no special deductions for resellers. There is no special knowledge your CPA needs in order to serve you as a reseller, okay? So just because they say, oh, well, I don't have any other reseller clients, does not mean they're not a good CPA for you. And then it's a vibe. Honestly, from there, I'm going to be 100% honest. This is somebody you need to vibe with. You're giving them your personal financial information. You need to feel that you can trust them. You're going to have to go on your gut. Do I like talking to this person? Am I going to be nervous every single time I call them? Are they personable? Do they explain things in a way that I can understand, or is it all jargon up here? So you got to just kind of judge that. It's almost like going and finding a doctor in a sense, right? And that's how I would say pick a CPA. Is there a problem using a CPA in a different state? Usually not. No, usually not. There's a lot of CPAs that'll work virtually. So not at all. Now, the only time that may come into play, and usually it's not a big deal, is when it comes to state taxes. There is almost no CPA. I mean, I'm sure there's some geniuses out there that are going to know every single state tax law. They just vary too much. There's no way to know all, there's 46 states or 47 that have state tax. We're not going to know every single law. However, most states follow federal. We have ways of looking it up, and most of the software that CPAs use accommodate all the states. So I don't see a problem in doing that at all. Yes, how to define hobby versus business. And the IRS absolutely 100% cares. So I have a PDF that really explains that really, really well. Basically, and it is on intent. So you're going to hear a lot of people say this whole rule about, well, if you made a profit 3 out of 5 years, just ignore those people. There is a 3 out of 5 year caveat component thing to it, but that is not the rule that this is based on whatsoever. It is intent. The IRS actually has 9 questions or 9 criteria that they use to determine if you are a hobby or a business. So you can go and look at these 9 things and determine that also. You have the exact same information. It's not some secret formula. It's not something the IRS is hiding from you. It's plain and simple put out there. I actually probably have it in my notes here because I wrote it down for a few weeks ago. And you go through and look at that. But it kind of boils down to a few things. Are you operating with the intent to make a profit? Are you doing things that shows that you're operating consistently? So are you sourcing? Are you planning shows? Did you just sell something one-off from your closet, or have you had multiple shows? Are you investing in backdrops and things to improve? Have you bought a ring light? Are you doing things that look like you're in a business? If the answer is yes, you're a business. It is really, really easy to cross from a hobby to a business, and it happens faster than people realize. I did a show on this. We talked about this. See if I can find my notes. When was that? YouTube. That was like, I think 2 weeks ago on Friday. If you want to look at it on YouTube, I did a whole like hour long about hobby versus business. I have my notes here. I don't want to go like all the way back.
You're like me. I love discounts.
And so check out the PDF. Or here's the other thing you can do if you don't want to spend money, and that's okay. Totally cool with that. Go to the irs.gov, type in the little search bar, hobby versus business, and it'll bring up those 9 factors for you. So, but basically, if you're doing this and you've made money and you're buying stuff to resell, that intent's already there. You're already establishing yourself as a business. A hobby, think of a hobby as this. A hobby is something you do for fun. It's a one-off. If you make money as a hobby, it's like an accident. It's kind of like, oh, cool, I made some money. But the minute you strategically start planning anything, that's a business decision. That's not a hobby. A hobby is, I collect toy trains and I set them up, and you know what? I don't use this train anymore. I'm going to throw that on eBay. That's a hobby.
So that means I was a hobby?
I don't collect husbands. What are you talking about, silly?
No, my mom said it was an accident.
Oh, goodness gracious. Ooh, Cavalier, you just hit on my favorite topic ever. So a sole proprietor. The minute you go into business, you are classified as a sole proprietor. A sole proprietor is the most simple form of business, the easiest to operate. It is basically, hey, my name's Tracy, I'm a sole proprietor. That's all there is to it. It's how the IRS classifies you. There is no separation between you and your business. All your business debt liability is on you. You are one and the same with your business. That's a sole proprietor.
Thank you for joining us. Have a wonderful weekend.
Thank you. An LLC, you actually file for an LLC through your state, and that becomes a separate legal entity. Okay, we're going to talk about taxes because people have a misconception that if you're an LLC, there's some tax breaks. We'll get to that. Let's talk about the legal aspects first. So when you file as an LLC, that creates a separate legal entity that kind of puts an umbrella over your business and gives some separation between your personal assets and your personal liabilities and your business assets and business liabilities. That's kind of a very high-level legal view of how that works. When it comes to taxes, if you are what's considered a single member LLC, that is me, Tracy of Zoe's Treasures, I filed for an LLC. Tax-wise, guess what? I'm a single member. It's just me. I don't have a partner, right? I filed the exact same Schedule C tax return as I did when I'm a sole proprietor. There's no difference, okay? And when I say single member, that means who's ever on that tax return. So you and a spouse would be considered a single member because it's one tax return. Now, if you file an LLC with your cousin Bob, Bob does a different tax return. Now you have a separate legal entity and you have a whole nother tax return to file, and that income flows back into your personal return in the form of a K-1. So the LLC, it kind of depends if you're a single member or you have partners outside of your tax filing form. This is a huge misconception, and you hear it all the time. File for an LLC, it protects your business assets, it does this, it does that. You get so many tax breaks. There's no difference in tax. There is nothing that I can claim as a single proprietor that that I can't, they're one and the same, the exact same tax opportunities. There are times it makes sense to have an LLC, and there's a lot of times it doesn't. There are so many people that rush into an LLC not understanding it because it's advertised everywhere and some reseller on some chat show said you need to be an LLC. And it gets under my skin. Once you create that LLC, you create this corporate veil that goes over the legal side of it. It's a corporate veil that kind of shields your business, right? It separates those assets and liabilities. So people think, oh, if I'm ever sued, I've got an LLC, I'm good. Well, if you're not operating that LLC in a way that is 100% business-like, you have breached your corporate shield and you open yourself up. Any lawyer is going to come in and attack your personal assets and your business assets. So there's a lot of, I see that, honey, thank you. There's a lot of requirements and things that you need to do in order to maintain that LLC. The other side of it is, as a sole proprietor, if I decide I'm done, I don't want to do whatnot, I'm out of business, it's mic drop, I'm gone. I don't have to do a thing. I'm done. As an LLC, you've created a whole nother entity. Now you have to file and pay money to quit. Kind of sucks, right? Cavalier, file jointly, however, prenup is sole person business. Is there a difference for filing? File jointly, however, in your prenup is a sole person business. Okay, if I'm understanding that right, your prenup has nothing to do with your tax return. If you're filing jointly, everything I just said still applies. My daughter and I do what not together. It is under my daughter's account. It is my finances that source my home supplies. How do we handle the taxes? Hank's mom, unfortunately, all the taxes have to be reported on your daughter's account. Now, that is a case where you may want to consider forming an LLC so that then the profit from the business can be properly allocated and the taxes paid accordingly from you and your daughter. It's a scenario like that that may be a good reason to create an LLC. So glad I learned on that show. I had to mention the LLC to my accountant about my other business, and I'll be changing it to sole proprietor. There you go. I like that. Forgotten. Yes, sole proprietor is like dating, and LLC is like marriage. 100%. Yes, I love that. I am so going to steal that and use your analogy. That's one of the things. I'm going to do another giveaway here real quick. Thank you. The whole LLC thing is really, I don't know. I get torn because to me, this is my life. This is the career I've had for 30 years. This is where my mind has been for a long time because that's what I do, right? So when I go into other chat shows of people who don't have a accounting background and they're giving tax advice just based on what their CPA told them, it really bothers me because there is no one size fits all solution to anything in accounting or taxes. You will hear me a lot of times saying it depends on the unique set of facts and circumstances that you have. I even don't try to say you should do this or this is the way, or I try to be more, this is how it works. These are the things you need to think about, because I can't even tell you what to do because I don't know all of your information. So I always encourage people to double check stuff. Anything I say, you can always go to irs.gov to validate, to look up, go back to your own CPAs, ask them about it. I hope more so that I'm just creating awareness to give you the background to have those conversations. Does the Schedule C show our screen name and our legal name? Nope, just your legal name. Schedule C is just your legal name. They will ask for, if you're doing it, if you have a business name, you can put it on there. But it doesn't, no, it's okay. But it doesn't, we'll pull it up. All right, let's see if we can pull it up. I'll see if I can pull up a Schedule C. We'll walk through it very quickly. I don't know if I can. You'll do it. You'll come over. Okay, he'll come over and pull it up. You'll do it right there. Thank you. Can she use my proof of expenses? If you paid for them, see, now we're getting kind of tricky because she's not paying them. I would, like, in that case, I may, just be like, yeah, just let, because it would be no different than you just gave her the money and she bought the business expenses. So yeah, I mean, you could work around that situation, and she'd be able to deduct some of that, yeah. But like, you can't use, if you're using your home, so if the income's on her side, the expenses are on her side, she'll lose out on like the home office deduction if it's happening in your home. So you can't use the home office deduction. It doesn't make sense for you because you have no income to report with the business. Can you explain a little bit about earnings and what might be written off and lower the amount a person owes? Hope that, yes, absolutely, good stuff. So this is a kind of an analogy I use. On January 1st, we start right here with income, right? We're at zero. Our book income, our accounting, our bookkeeping is zero, our tax is zero. Throughout the year, hopefully we're making money and our income and our book income goes up and up and up. Then comes tax time, okay? So we start out with our tax the exact same as our book. Our job is to lower our taxable income so we're paying less tax. I want a lot of income to show on my books, and I want a very little bit of income that I'm paying taxes on. So the way we do that, the way we create that separation, is by tracking all of our expenses. So you're looking at some of the common stuff people miss, all of your subscriptions. If you use Spotify to stream music for your shows, your Spotify, your venues. Here, let's go through here. This is a Schedule C. So let's look at some of these expenses. Advertising, that's marketing. So when you're doing those sponsorships or you're doing giveaways, it's your marketing. We've talked about using your car and truck expenses. Commissions and fees. So these are the fees we're paying. If we have to pay somebody, we can do contract labor. B squared, I see you. I'll answer that question in just a second. I think we're going to get to it here. Depletion and depreciation, I'm not going to go into that. Depletion usually doesn't apply for whatnot. That's like oil reserves and natural resources. Depreciation in Section 179 ties to your equipment that you buy. Employee benefit programs, if you have employees, sometimes for yourself, if you're paying yourself a payroll, we can deduct some of the expenses here. Insurance other than health. If you have to insure your inventory or you pay any type of business insurance, you can deduct that. Interest, if you have interest on your credit card that's solely for business, this is where it would go. Legal and professional services, what you pay for that CPA to do the business portion of your tax is deductible. Office expenses, so think printer, ink, paper, any consumables that you use in an office administrative type capacity would go there. Kelly, you got that giveaway. Congratulations.
Congratulations.
I'm not going to go into pension and profit sharing. If you have a pension or profit sharing plan as a sole proprietor, you probably are already working with a financial advisor and a CPA. So, and there's a lot of really nuanced rules around that. If you rent or lease a space, maybe you rent a warehouse or maybe you rent a storage unit, that's deductible. They break it down. If you rent other types of things like machinery or equipment, that's a different type of rent than renting a storage unit. So you just have to classify it a little bit different. Making repairs on those type of things. Making repairs if you, on your iPhone, the screen cracks and you need to get it fixed. That's repairs and maintenance. Any supplies you didn't include before. Shipping supplies, boxes, bubble wrap can put right there. Taxes and licenses that go, anything you pay for a tax or a license for your business can go on there. Now we're going to get to that question somebody asked earlier. I think, was that B squared asked? Yeah. Travel and meals. There are some, if the travel is used for business purposes, then there is some deductions you can take for that travel. And a certain portion of the meals, a lot of that is usually limited to about 50% on the meals side. Travel is at full cost as long as you're traveling for business. This does not mean that you can take vacations and take your family and write it all off. Utilities. So if you're paying, you're renting a space, maybe you're renting a room to do, you're renting a warehouse or you're renting something and you have utilities. Wages, if you are paying employees, like actually doing payroll. Energy efficient commercial buildings deduction, that's a kind of a newer deduction. I'm not going to go into that one, but there's special ones if you're renting commercial buildings. Doesn't apply to most of us. And then other expenses. Anything that we didn't cover before is other. And then on the bottom of that my husband didn't scroll down to, is your home. It's okay. Is home office. So right down here, we start to see at the bottom of that form, expenses for business use of your home. They give you worksheets to work through that. It's really a very simple formula to do. Okay. So those are the main things that you can take.
And as you can see, this is coming straight from the IRS.
So you really need to think, there's two key words. When you think about what's deductible on my tax return, two key words you want to keep in mind: ordinary and necessary. So this is why some people will say you can deduct certain things and other people say you can't. It has to be ordinary, the expense has to be ordinary and necessary in the course of your business. So what does that mean to whatnot, right? Shipping, electronics, bubble wrap, printing paper, boxes. I'm trying to think, all your subscriptions. So ordinary and necessary to do your whatnot business. Backdrops, shelving, things to organize your inventory. That's all stuff you need, right? To do your business. I'll talk about your home in just a second. And that was a Schedule C. That is the form you file as a sole proprietor. Thank you. We got that. Okay. Well, I'm so glad forgotten memories. That makes me happy. So ordinary and necessary. There is another person doing chat shows. I don't call anybody out by name, but somebody mentioned it this morning in my show also, who is out there telling people that you can take your fake nails, your hair, the expense to do your hair and all of your clothes because you are on a camera and you're doing this live selling. So all of that is deductible. That is false information. Let's think about ordinary and necessary for a second. Do I have to have fake nails? That was funny. Do I have to have fake nails to do my job? To do this job? No. Do I have to have great clothes? No. You see people in bathrobes. You don't have to have great clothes to do this job. So that's not ordinary and necessary. Now, if I'm a content creator and I'm creating content because I have a brand deal with a certain clothing person, one, they're probably giving you the clothing, but if not, if you're purchasing it, that becomes a business expense because that's ordinary and necessary in line with the brand deals that I have that I'm representing, okay? So because maybe a certain content creator can take a deduction on something doesn't mean you can. And it's not that the IRS allows one thing or another. It's the exact same rule that we all follow. The difference becomes what's ordinary and necessary in my business versus what's ordinary and necessary in their business, okay? My green screen, somebody brought up the green screen. You can see behind us, that's what we use. And Cammie, you got that giveaway. Thank you very much.
Congratulations.
My green screen is ordinary and necessary in my business because graphics is part of my brand. We do a lot of graphics. We do a lot of stuff with the green screen as part of the brand we have created on Whatnot. That may not be ordinary and necessary for somebody else. Equals expending nails. There you go. You got to go be a content creator with some brand deals. I love discounts. And think about it like this. Every business, Coles, every business follows these same IRS rules. You guys hear, I know we all hear it. Oh, they get loopholes. They get so many things that they can do and we can't. And no, they don't. We all follow the same rules, but it comes down to the differences in the businesses. A manufacturing company is going to buy a drill and a bulldozer and whatever else. Do we need a drill and a bulldozer for Whatnot? I mean, that would be kind of fun, but not ordinary and necessary. So we all follow the same rules. There's no special loopholes. There's no special deductions. It's just, it doesn't make sense in your business. And keep in mind, that's for taxes. There's a different set of rules for your bookkeeping. Your bookkeeping doesn't necessarily have to follow ordinary and necessary. It has to follow reasonable expense to create income. So I might, if I don't sell all this stuff, need a bulldozer. Yeah. So that's kind of a big thing that we hear a lot about. I don't know. We've got a few more minutes on this giveaway. We've been on for for quite a while, so we're doing good. Are there any other questions? If not, I think we'll just chit chat until this giveaway runs out, and we'll go from there. Let's see if I had any other topics of things that maybe we can just kind of talk about. I do plan on being here every Friday, so if you have friends that have questions, send them my way. I'll always trying to help. If I bought racks to hang clothes on but don't have the receipts, can I still expense? You can. Listen, the IRS, nobody cares about your receipts. The only time people care about your receipts is when you get audited. So this is a measure of personal risk here. You bought some racks, probably maybe a couple $100. Put them on your tax return. If you ever get audited and the IRS is like, show me the receipts, and you're like, look, I don't have the receipts. Look, I can show you on Amazon how much they cost. You can see the racks here. They may just be like, okay, bat an eye and not care. I mean, so it's kind of like, it's a give or take. Something like that, if it were me, I would just put it on my tax return. I would just be honest about the price and put it on my return. Your receipts are only for you. Your receipt is for two purposes. One, for you to come home from wherever you spent that money, record it in your books, and then put it in a box in case you're ever audited. It's the only thing you need your receipts for. Yes. Marine, I can't read the name.
Marine Sniper.
Marine, thank you. Marine Sniper. Yes. Any whatnot income, all of your income, you have to pay taxes on. There are only a few things that are certain in life: birth, death, and taxes. And you got to pay your taxes. How do I find your form? So I am assuming you're asking for a 1099. That is the form that reports the whatnot income. Whatnot would have sent that out by Stripe about 3 weeks ago. So if you use Stripe, you'll be able to go into your Stripe account and access your 1099 if you met the requirement. 20,000 in sales, 200 transactions. If you did not use Stripe, you will not get a 1099 from Whatnot. You didn't use it. Okay. So you will not get one. What you need to do is to go into your Seller Hub, go under Finances, and pull down the annual report so that you can match up your records with Whatnot's records. So that's what you need to do. So your annual report will tell you everything that Whatnot has. It tells you all the revenue, fees, and shipping that you may have paid. You found your annual report, but how do I file it? So you will take that information along with, hopefully you've been keeping accounting records all year. So you have a good report of all of your expenses, all of your inventory. Yep, you will take that and you will transfer that information into a Schedule C. That was the form we were just showing right there. That gets attached to your 1040 tax return. Does buying product cost money? Yeah, absolutely. Yes, it does. Who's getting that giveaway? Hanks' mom. Congratulations. So where do people find wholesalers for any type of products? Online, basically. I actually found a wholesaler doing Google searches, word of mouth, but a lot of times it's Google searches. I would recommend, if you're using any type of wholesaler, to buy a very small thing first to test them out. There are a ton. If you Google, put whatever you're looking for, like wholesale clothing, t-shirts, so be as specific as you can, and you're going to get flooded on Google with all kinds of them. So it's one of those things you really got to start to research through. Okay, so everything I buy on Whatnot can be written off. Southern Charm, thank you so much.
Welcome in, Raiders. Grab your hats and step into Zoe's Treasures, where the relics aren't cursed. They are for sale.
Southern Charm, thank you for rating. Every time we get a raid at Zoe's Treasures, we always take a look at the seller's profile as a thank you. I mean, we're going to look at her profile, but I can already tell you, Southern Charm is an awesome vintage decor seller. Highly recommend her. Definitely, I would say bookmark her. I don't tell people to go and follow and bookmark very often, but she is one that absolutely you should follow and bookmark. Sweet as can be as a person and an awesome seller and has great stuff.
Hello,
Let's take-
Brittany.
Hi, Brittany. Let's take a quick look. There she is, Southern Charm. She does $9.21 reduced shipping on vintage decor. Oh, yeah, and she also sells jewelry. Almost forgot that. With reduced $3.99 shipping on jewelry. She really has some really cool primitive stuff. And her next show is, scroll down, right there, 210, coming up really soon. Her next show is costume jewelry, and she is on every Friday night doing vintage decor with some other shows and raid chains. And she's also a really awesome mod, and she mods the Big Kahuna's raid chain with myself and CG Boomerang Echo. So, all right, let's see. Let me go back to, so thank you so much, Southern Charm. So everything you buy on Whatnot can be written off for the most part. If you're buying it for business purposes, it could be part of your inventory. Absolutely. I thought you can only write off what you sell in that tax year. So yes, what you can write off if you're using the accrual method is only what you sell. So when you buy something, it becomes an asset. When you sell it, it becomes an expense. If you're using the cash method for tax purposes, you can write off everything. So you really have to look at which one is going to work best for you. I don't recommend cash. There are certain circumstances it is good, but in general, for a continuing business, the accrual method works better. So, any other questions?
And then for those of you who are new to us, if you like the business talk, I will encourage you and invite you to come to Reselling Roundtable. Reselling Roundtable, it's a video podcast held by 3 people from Whatnot with extensive experience.
So we do this YouTube every Sunday evening at 6:30. If you like to hear talk about reselling, we talk primarily about Whatnot, but we also talk about the other platforms we all have experience on. It is myself, which is Zoe's Treasures, Jeremy from Green 13, and Tony and Lysandra from I Love Discounts. We come together, we debate, we talk, and we have a good time for about 2 hours every Sunday night at 6:30. And it is a live YouTube where you can actually ask questions, and we try to respond to the chat as much as we can. Kelly says, but you could have purchased it in the year before. So you're probably talking about inventory. Absolutely, yes. So if I buy something in 2025, buy a piece of inventory in 2025, it's sitting there as an asset on my books. I don't sell it. So it's still sitting there. I don't take it as an expense in 2025. In 2026, when I sell it, then it becomes an expense on my books. So, yep, you only carry it over if you didn't sell it and you're using the accrual method. You carry it over. All right, you guys, it is 8 o'clock. Oh, let me see what Rhesus has to say. Hello, Rhesus. Just joining. You probably answered this question. When you pay for something in a yard sale, how do you prove or document? I always recommend for yard sales, garage sales, estates, anybody that doesn't give receipts on a regular basis, have a logbook. Have some type of little book that you, either a logbook or an Excel spreadsheet, have a record that you create. Keep the date, what kind of a short description of what you bought and how much. Sometimes you may even want to put like the city or the general location just to give a little more validity to it. As long as you consistently document that, you should be fine if you're ever audited. One, it gives you it's easy for you then to account for it, right? But if you're ever audited and an IRS agent comes in and you have all these expenses and you're like, oh, I bought that from garage sales, they don't give receipts. And that's all you say and you don't have any proof, they're going to be like, yeah, you can't prove that. We can't allow you to take that. But if you say, I bought all this stuff from garage sales and estate sales, and I don't have receipts because they don't do that, but here I've kept a detailed log of every single time, they're going to see that intent, that validity, that consistency, that you're acting and operating like a business, and you'll probably be okay. Or bring a generic receipt and have them sign it. Yep, you can do that too. Now, some of them might be iffy on if they're going to sign it or not, but yep, as long as you're consistent in recording it on a regular basis, it's your intent, it's your consistency, it's you creating the story of your finances is what you're doing. Oh, well, congratulations on your booth.
And if you're just joining and you missed part of the show, you can always go back. We're multicasting to YouTube there's the YouTube channel. You can always find our shows in YouTube.
Yep. And with that, I think we're going to go find somebody to raid. Been on for a while. I got to go get some food here. So I'm going to be here every Friday night, at least through tax season, trying to be available to people on the other coast, or East Coasters too, but just trying to be here through tax season. So we will see you all soon. Tomorrow I have a show. If you like vintage decor, we're doing a mixed vintage decor show. Come see me.
Thank you, Miss Mary.
Bye, everybody. We're going to go see who's on to raid. Oh, you know what? We haven't seen Dagny at Flying Pig Thrifts in a while. Let's go see Dagny.